I feel like Jay Powell and the Fed, Jeff, are like Robert Redford in The Natural, right? They're kind of, they're all banged up and like they have to hit a home run. Otherwise, they're not going to win the pennant. Are we placing too much faith, hope, and emphasis on the Fed?
We can root for them, but it's a real tall order. The deck is stacked against them. Not only do we have escalating trade tensions, renewed tensions with North Korea and Iran, we've got a slowing global economy, CFOs talking about a recession next year, this global slowdown. It's a lot to stack up against a rate cut here, a rate cut maybe in Europe as well, especially when you look at rates already negative overseas, and financial conditions in the U.S. or elsewhere really aren't the cause of this downturn. It's really related to these other factors I mentioned. So it's a tall order for more monetary stimulus to turn everything around.
For the first time, I think ever, Jeff, correct me if I'm wrong, but at least not for a long time, global PMI, okay, without getting too wonky with economic acronyms or whatever this hour of the morning, global PMI has fallen 13 months in a row. I don't know if that has ever happened. If not, it has not happened for decades. What is that telling you?
Yeah, it's a really weak manufacturing environment. And you could say, well, manufacturing is only a small portion of total global output. It's really services that we do with most of our efforts and most of our people. But manufacturing is a good leading indicator where the rest of the economy is headed, and that one's been headed down for some time yet to turn around. It's also a good leading indicator for profits, and they continue to slide. What it's signaling is a second half that's probably not going to see that profit rebound that many analysts are hoping for.
The Eurozone, the European Central Bank, just less than an hour ago, basically all but screamed at us that they're going to be cutting rates and or buying bonds again. Does our Federal Reserve now have to react to what they may do? In other words, we get some kind of global race to the bottom in rates and almost a currency war.
Maybe. We've already seen a number of central banks in Asia, smaller ones, of course, but they've started to cut rates. I'm not sure. I think the ECB may move in lagged response to what the U.S. does. But remember, what we heard this morning from Draghi, well, it may not be his call. Later this week, there's going to be a summit in Europe where they're going to decide who the next head of the European Central Bank is. Draghi's out by October. If it's a German, and there's never been a German head of the ECB, some feel it's time, that could go in a very different direction.
So what do we do with U.S. equities? I mean, that's the bottom line. All this macro stuff we talk about, right? I mean, that's out there. But what our viewers and what your clients want to know is, what do I do?
I think there are a few things to consider. One is think about the healthcare sector. This is a sector that's really lagged this year and is reasonable from a valuation perspective that could really do well or relatively better in an environment of slowing overall growth. Of course, healthcare is a more defensive sector, and it's also one that did very well in the fourth quarter of last year when stocks fell fairly sharply. It was, I think, the second best performing sector. So that's an area you could look for some maybe defense in an environment that may be a little more difficult in the second half of the year. The other thing is broader global diversification. I know that seems crazy in an environment with so many threats, but correlations among the world stock markets have moved down to the lowest level in 20 years, meaning they're moving into more independently of each other. So broader diversification may be something that's real beneficial here as opposed to investors' normal instincts, which is to narrow their portfolio during more difficult times.
Should we invest? This is going to sound crazy, and I haven't been drinking. It's 5:30 in the morning. Should we invest in Japan? I know they've had 5 recessions in 20 years. The market's done nothing in the last year or two. But on every metric, Jeff, it looks insanely inexpensive.
Japan does have a number of things going for it, in addition to the fact that Japan's not targeted directly in any of these tariff threats.
Exactly. They're kind of out there, literally and figuratively, an island.
Yeah, that's absolutely the case. And consumer confidence in Japan has actually come down a little bit and maybe beginning to turn around and peak back up again, as opposed to the U.S. and Eurozone where it's very high and beginning to recede. So there might be more durable strength even within the Japanese economy than we've seen in some time.